This is a chart for Bitcoin, and Bitcoin is currently $110,068. If I was to ask you a really serious question, where is Bitcoin going to next? If you just look at this chart, you've already messed it up. You cannot determine Bitcoin's price momentum through Bitcoin's chart. This comes as a real shock to a lot of people. Therefore, how can you determine Bitcoin's price momentum? The answer is one word: intercorrelation. Financial markets require a lot of experience to navigate. Many people simplify that navigation process down to it's only up or it's only down, but we know price is always moving in a wave. Stacking probabilities in our favor is incredibly important. One thing that we can see from Bitcoin's price chart, it's starting to consolidate. But where it actually goes is because of intercorrelation, not because of Bitcoin. This is pretty mind-bending stuff, and it took me decades to understand and crack this code. And I'm going to share it with you now. You're going to find this a fantastically informative and valuable video. It will literally change the way that you look at the markets. Let's get into it, and let's run the numbers. Welcome back, everyone. I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome, and welcome back, CTKS family. Now, what we're going to do is to understand how price charts work. And why would we do that? So many investors just say, I don't care what the price is, I don't want to be greedy. Greed has nothing to do with price. Your advantage is not another person's loss, and it's really important to understand that. Just treat it from this perspective. If you go shopping for gold or silver or something like that, or Bitcoin, or what could it be? Well, it could be anything. Tesla, Nvidia, Microsoft, Solana, Doge, XRP, whatever it is, you want to get the best bargain that you could get. That is normal, and that is not wrong. That is actually correct. Now, how do you find bargains in the market? Well, first of all, you have to understand what causes the markets to move. What causes the markets to move is basically risk on or risk off sentiment, which we look at in row 1 and row 2 of the free cheat sheet that's available from ctksmethod.org. Then we just compare those rows into row 3, which are the major market indexes, to see how the subcomponents, the stocks, and the crypto market are going. Everything is risk. Risk means both opportunity and danger, and as price is always moving in a wave, we must know where the ceilings are and where the floors are. The floors will catch price as it comes down. The ceilings will reject price as it goes up. The ceilings are called resistance. The floors are called support. Then we need to look a little bit more deeply. A lot of people will say, oh, I'll just look at price. This must be a floor because price came down into here, so it must be a floor. Hang on a second, why didn't it work? Because it's not a structural floor. In other words, to buy effectively, we need to know where the structure is. Okay, let's get back to the question. How do we determine where Bitcoin is going? If we determine where Bitcoin is going, we're also determining where Ethereum is going, Litecoin, Bitcoin Cash, Ethereum Classic, BNB, XRP, Doge, Solana, ADA, all of the alts. It's so cool. Through looking at Bitcoin, you're actually solving a lot of questions, a lot of problems all at once. Let's go through the cheat sheet. Just to get you started off, just come into ctksmethod.org. This is the homepage, and then just scroll down until you see your cheat sheet to mastering price action. You can download it absolutely free here. This is the cheat sheet. Just to go in a little bit deeper, the cheat sheet is 7 rows of data that we assess from a directional stance, momentum, and also structurally. Row 1 and row 2 are risk off and risk on indicators. Now let's get into row 1. When we go through the cheat sheet, we're seeking to understand why our money chart moves as it does. Now, this blue line, which is Bitcoin, is behind every single chart. We're seeking to understand intercorrelation and interconnection. Each specific chart tells us a very important story. Inside row 1, we're looking at the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. When the VIX spikes up, that means that people are getting really worried inside the market. There's been a lot of trade tensions, and the trade war between the US and China is fully fledged. When you get these big spikes up, it will crater not only Bitcoin but the markets. But these spikes up do tend to recover. Just make sure that you understand price is always moving in a wave. It's going up and down. When price comes down, that doesn't mean it's going to go down forever. A lot of people say it's going to zero, whatever it is. The S&P 500 is going to zero. People say it. They're just driving you emotionally. You have to disconnect your emotion. You actually need to become emotionless. Now, a lot of people say, give me an indicator and I will be emotionless. It doesn't work that way. As soon as you put money into the market, you will have emotion. Start small and scale is the key. So we've seen recently that the VIX has been coming up. We were predicting this for some time because the VIX had been basing for many months. Now we did get that spike up. Now it's starting to come down. And it looks like it's going to continue on the way down. That will push risk on into the crypto market and also into the stock market. We've seen that the dollar has been going up and is in a positive price path at the current time. Dollar yen also, the yields, the 10-year and the 2-year are coming down. When you get the 10-year and the 2-year coming down, that's very positive for gold, silver, and commodities. And when you get the dollar coming down, the 10-year coming down, the 2-year coming down, gold and silver and copper should rally like nutcases. Now, when it goes the other way, when we start to see the yield starting to turn around, that's going to put negative price momentum inside commodities, gold, silver, copper. Bitcoin is treated as digital gold, but it isn't really. It's the risk-sensitive asset class across global markets. And we can see something really interesting here. Oil is starting to increase. Now, when oil drops off a cliff, it's generally because either we've got supply gluts, and we do in the case of oil, but also there's a macroeconomic issue as well on oil. If oil is coming down like this, hard times are ahead. If oil is coming up like this, we've either got trouble in the Middle East or economic production, GDP, is picking back up. So we've got actual optimism inside the economy. Tricky stuff. Our CTKS Global family are the top 1% when it comes to understanding why price moves, when it's going to move, where it's going to move to. We have superpowers, absolutely no question about it. So we can see that the VIX is starting to decay. We're also seeing that the yields are coming up. That's going to put negative price momentum inside gold and silver. It may not come out originally, but it's there. So when the yields start to do this, we expect gold and silver to start to do that. So it's very important to keep your eyes on these things. When gold and silver go down, and so much money has piled into gold and silver, that money will be reallocated to the stock market, individual stocks, and also into the crypto market. Capital flows are a big part of how markets work. Now, what we need to do is to look at row 2 and seek confirmation signals. Row 2 are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. One of the things, if we don't do the cheat sheet, we simply don't know how the markets are moving. We don't know if they're improving, if they're starting to break out, if they're starting to break down. We don't know. And that's why our CTKS Global family is elite. Because we do know. We stack probabilities. Now, what are we seeing with junk bonds? Junk bonds measures the willingness for people to borrow money, and the whole system is run on debt. We can see a breakout here inside junk bonds that is insanely positive. As junk bonds is coming up, we anticipate the entire market, the crypto market, the stock market, individual stocks, individual cryptos to come up with it. Also, we've been paying a lot of attention to the Aussie dollar. Look at how the Aussie dollar is just consolidating. Right down here. What's Bitcoin doing? It's consolidating right down there. Now, if the Aussie dollar starts to break out, and it should based on junk bonds showing positivity, the yield showing positivity, capital flows potentially reallocating out of gold and silver. And just to know how much gold and silver have absorbed capital flows, it's absolutely nuts. The thing to understand, gold is geopolitical by nature. If gold is increasing, there's problems in the world. And what was the problem that caused gold to just slightly flip up? It hasn't flipped up much, just a little bit, but what was it? It was Russia, Ukraine. In the last bull run, gold had a market capitalization of $10 trillion. Now it's literally 29 trillion. It's come down quite a bit from this, but it's just come back to meet the normalized structural price path that we did. We projected this path at the start of the month. This is not a priced path that we just randomly draw in. All of this is structure. And you can see how we've done a fairly good job of pinning the moves inside the gold market for month on month on month. This is available to Elite Service members. Now, the key to understand here, when gold loses its shine, we're going to get cross-funding between markets. The money goes somewhere. So returning into row 2, we can see that gold is just consolidating. And this makes a lot of sense because there's a really good level of support that gold is trapped between. Silver came down into structural support and it's just basing there at the moment. If it starts to fall down, and it could fall down if the US dollar starts to kick off and the yields start, the 10-year and the 2-year start to come up, that will alter the dynamics of the return basis of gold and silver and also copper. But copper is a little bit more of a economic production unit rather than gold is a geopolitical risk. All of these charts, they serve different purposes. Now, don't forget, we're seeking to understand where Bitcoin could go. We're looking at junk bonds. This is into the bond market. We're looking at the Aussie dollar. We're into Forex. We're looking at gold and silver and copper. We're into the commodities markets. This is how institution of one players deal with the markets. They are elite. They are CTKS. Hopefully you can see if somebody just tells you, I know where Bitcoin's chart is going because I'm just looking at Bitcoin. You can say, that's not institution of one thinking. That is not institutional thinking at all. That's retail thinking. Now, what is the difference between institutional and retail thinking? The difference is literally night and day. Institutional traders and investors need to stack probabilities. We're already stacking the probabilities that the VIX is going to decline, that the Aussie dollar is going to come up, that junk bonds are already coming up, that gold and silver, gold especially, has hit an area of support. And there is a little bit of geopolitical tension, a little bit, well, that's probably an understatement. There's always geopolitical tension, but gold is sensitive to it at the current time. But if yields are going to retrace and the DXY is going to come up, that's going to throw a lot of negative downside momentum inside gold and silver. And therefore, cross allocations of capital will be on the agenda. Now, where will that capital formation come into? Well, it will come into row 3, which is the S&P 500, the Dow Jones, the Nasdaq, the Russell. And what are we seeing here? We had a lot of buyers just pick up the slack there. We've done a trend change on a very intermediate basis. We already know where the structural overhead resistance levels are. We know so much. We actually have X-ray vision on where the markets are going. We know that if the S&P 500 continues to come up like this, and it should, given the stacking of probabilities that we're seeing just now. Don't forget, these charts are on a daily basis. If we get that follow through with the S&P 500, we get follow through with the NASDAQ, we get follow through with the Dow, which is looking a little bit weaker there. It's looking reasonable for the Russell. It looks like it wants to break out here. If we're going to get that, Bitcoin will go with it. Now, how do we know that? This blue line is Bitcoin. Bitcoin follows the major market indexes, not precisely, but directionally. If the major market indexes are coming down, look what's happening to Bitcoin. A lot of people say, and they only look at the crypto market, they say there is no way that anybody could have predicted that Bitcoin was coming down. We do it all the time. We know exactly why. We also know where, how, and when. This is why members of the elite CTKS Global family are elite, because we understand that the markets are complex. We seek to make them as simple as possible, but they are complex. They're not simple at all. And how hard did you work to get your money? And how hard do people work to keep it inside financial markets? They basically go, the candle went green, I'm buying. The candle went red, I'm selling. Looking at a price chart? No, I'll just look at the color of the percentage change on a daily basis. Wow, that's nuts. But it doesn't stop people doing it. And I must admit, I used to do it when I was fresh in. Now, nearly 40 years later inside financial markets, I wouldn't dream of it. We need to know direction and momentum. Now, what we know right at the moment, if the VIX continues to come down, if the yields continue to come up, if the Aussie dollar starts to rebound, that is really good stuff for the entire market. It's good for the S&P 500 futures, for the Dow futures, for the NASDAQ futures, for the Russell futures. And we can see that Bitcoin, this is on a 1 hour basis. This is getting pretty damn granular. And we're looking at this. Look at the staged rebound that we see. This is called directional correlation. Remember, the price is always moving in a wave. It comes up, it goes down. It comes up, it goes down. That's why we must understand from a broader perspective. This is exactly why we do the cheat sheet. Now, if the NASDAQ starts to come up, these are the futures. If we start to bypass this area, that is a very good sign. Now, we did get a bit of a pullback here, and that pullback has shown itself inside the crypto market at the moment. But this is just basic price action, moving in a wave. Wave-based price action is normal. That is rule 4. So we're already seeing row 1 is showing signs that the markets are not just Bitcoin. Bitcoin is like the VIX of the total global market system. If Bitcoin is going up, there's risk on. If Bitcoin is coming down, there's risk off. This is the ultimate VIX to look at. But we can't just look at Bitcoin. We have to go into row 1 and look at this, and we have to confirm or deny what's happening inside row 2. A lot of people say, Ken, that's just too hard. I just want to throw my money, my life savings, into a chart, into just a name that sounds really cool. I'll invest everything in there because investing means I don't know how to sell. And I'll just hope and pray that it goes up. Typically, this is a really, really bad idea because people get very excited as the markets move up like this. Just think about gold. And when it gets really toppy, we as professionals get really concerned, and the retail market, who don't actually understand how price works, they start to buy the top and then it crashes down, like gold has done recently. People would say, gold, yes, it's just going to keep on going up and up and up. Gold just moves in a wave, just like everything else does. We're seeing positivity. So row 1 positivity, row 2 positivity, row 3 positivity. Now, does this mean certainty? Does it mean Bitcoin will certainly go up? There are no certainties inside financial markets. And if you want a certainty, you got one recently with gold because it was going up and up. And look at all those long lines of people going into gold shops. Fantastic. Time to buy at the top. When you've been around decades and decades inside financial markets, you won't seek certainty, you'll seek to stack probabilities. If you can remember any quote at all, certainty is danger. Certainty is the point of maximum risk. A focus on certainty will destroy your account. And don't forget, there's no limit of people out there that want to give you absolute certainty, and I can tell you it's absolute rubbish. You must stack probabilities if you want to survive and prosper. Going into row 4, which is Apple, Microsoft, Strategy, Tesla, and Nvidia, we've seen that Apple has just retraced somewhat, but it's seeking either a breakup or a breakdown. Tesla took a bit of a whack, maybe something to do with Elon selling $1 billion worth of shares. Remember, you must hold because big insiders need to sell. But it will all be alright because they will create lasting value. Now, what are we seeing with Microsoft? It's a bit of a dirty candle, but it is going up. What about Nvidia? It's just trying to figure out, do I go down or do I go up? Now, if we didn't know anything about junk bonds just breaking above that trend line, if we didn't know anything about the VIX breaking below a key level of support and going down, we would just look at this and say, oh, I'm absolutely positive. Nvidia is coming down. Now, this is how a price chart viewed in isolation can absolutely whack your profitability. You cannot just look at one price chart and determine where that price chart is going. From that price chart, I know it's flippy, but it's an absolute fact. There is not one institutional trader or investor that is intelligent that would ever do that. And we see Strategy is just following Bitcoin's momentum. A lot of people have been talking about Strategy, but it's just following Bitcoin. That's it, in a nutshell. There's nothing more to it. When Bitcoin takes off, Strategy will take off. Row 4 is telling us it's really early days. This is either the start, the bottom, and things are going to just push up, or we're going to get failures. But from row 3, row 2, row 1, the weighting of probability is for all of these to go up. Inside row 5, which is total crypto market cap, Bitcoin, and Ethereum, what we've seen recently, there was a real dastardly sweep of all of these lows. These sweeps occur with regularity. They're basically cleanouts. For example, when you go to sleep, you clean out all the toxins in your brain. When the markets sell down like this, they clean out all the leverage positions. So we've seen some optimism. Now, this is mainly due to the VIX, and this is on a 15-minute basis. This is mainly due to the VIX starting to decay. Now, if we get the continuation in the VIX decline, junk bonds coming up, the Aussie dollar coming up, we would anticipate that we will find a footing and keep on going up. Always remember, price is always moving in a wave. Now, why does it move in a wave? One's the clean out that you get, the other is just natural price action. People are going in and out with huge amounts of money. And this is something that a lot of people don't understand. The institutions just get in and get out all the time. A lot of people think that the institutions, they just invest and they just keep it there forever. That is not the truth. They're actively trading each side of the bid-ask spread. And when we look at ETH is a little bit weaker than Bitcoin. Now, how can we tell that? Well, when you look at the current position of Bitcoin's retracement, or total crypto market cap's retracement, and you can see it here as well, you can see that ETH is basically down to this particular area. So it's weaker than the overall crypto market and weaker than Bitcoin currently. Inside the crypto market, you always want to trade strength. You can invest wherever you want, but you want to trade strength. This substantiates the call that we are very, very early when we go into row 6, Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. Binance Coin was on a bit of a tear recently. Why is it so strong? Well, CZ got himself a pardon from the president. So fantastic. And also Coinbase and Robinhood listed BNB. That's gotta be a positive. The world's biggest exchange got even bigger. Undoubtedly, this is going to fuel BNB to the upside. But always remember, people, when they see these big green candles, that's where they get in, and when the big green candles turn into red candles, that's when they sell, only to see it go green again. We have a way to stop all of that. We must buy on red. Now, this is insanely uncomfortable, isn't it? Because you would say, as it's going down, it's going to keep on going down. It's going to go down to zero. Well, that's what you're told. And if you look at social media, you'll go nuts because it's all emotional garbage. Except for a very, very few people. There are terrific people inside the markets, but they are like hen's teeth. They are very few and far apart. So if anybody is pushing that emotional narrative of going to zero or going to infinity and beyond, disregard both. You must find the middle path. So when we look at Bitcoin Cash, just retracing at the current time, a degree of weakness there. Ethereum Classic, which is a proxy for Ethereum, little bit of weakness, it's just coming back to its own base. Now, the one thing that's really important as we look into row 7, which is Cardano, ADA, Solana, Sol, Dogecoin, and XRP, we need to look at these not just directionally and from a momentum and trend stance, but we need to look at them structurally as well. The only way you ever know why something is strong in terms of resistance or something is strong in terms of support is to actually look for structural support and structural resistance. We'll do that in just a tick. Now, when we look at ADA, we can see that we've been retracing. Now, why have we been retracing with ADA? It's all about Bitcoin. You can see this blue line, which is Bitcoin, absolutely decides ADA's fate. What about on Solana? Does Bitcoin decide Solana's fate? You bet it does. If Bitcoin is coming up, what's Solana doing? It's coming up. If Bitcoin is going down, what's Solana doing? It's going down. But the magnitude of these percentage changes is far greater for the alts. That's because they're much lower capitalization projects. What about Dogecoin? If Bitcoin is coming down, what's Doge doing? It's coming down. And if Bitcoin is going up that blue line, what's happening to Doge? It's also coming up. And coming down, going up, coming down. You can see it. This is on a 15-minute basis. This should prove the case that you must look at Bitcoin no matter what you're trading or investing in. If Bitcoin is breaking down and going to zero, or so certain influencers would tell you, and please just disregard those, unsubscribe, get rid of them. That is if you wish to keep your sanity, of course. If you like being insane, just listen to those guys. They'll give you a lot of entertainment while your account bleeds to death. So we can see exactly the same thing with XRP. Bitcoin coming down, XRP coming down. Bitcoin going up, XRP going up. Now, XRP and Bitcoin do have a very strange relationship with each other. They can diverge. So obviously, what we need to do is to look into Bitcoin structurally, because after all, if Bitcoin finds structural support, it's going to come up. And if it shows structural resistance inside Bitcoin's chart, it's going to back off. When we look structurally, we go through level 1 and level 2 standard certification to get these dotted lines on the chart. The majority of people, when they draw a straight line, a support or a resistance line on a chart, it's done just like that. They just go, yeah, I think there's one there, I'll do that. What we do inside the CTKS method, level 1 gives the foundation. This is not just one lesson. You just draw a random line. And all the magic happens inside level 2 standard certification. You might remember the paths on gold, that's lesson 22 out of level 2 standards. You can see there's a lot in drawing those lines. It may look very simple to have a dotted line on a chart, but you can see it's not so simple. It is scientific. Now, why would we bother with all of this effort? Let's look structurally inside of Bitcoin. Now, I'm going to throw on the structural indicator for Bitcoin. Now, when we look at this, we can already see that there's a massive amount of overhead structural resistance at that 111,300 level. This has been a very important level for us for quite some time. This is a key line in the sand. We must get above this particular level to resume the bullish case. When I look at this chart, I see a lot of different structure playing out, but that 111,300 is really, really important. We literally came up into it and rejected it. Now we've structurally failed at that 110,400 and we're coming back to where price is currently. This 108,900 level is a really important level for us to hold. Now, price is always moving in a wave. It goes up, it comes back, it goes up, it comes back, it goes up, or it goes down, or it consolidates. That's why we have three-dimensional thinking. When we look at a particular trend, we understand that if the overall momentum is to the upside, that's a positive thing, so we can hold in a position if we so desire to. Personally, I'm holding in my position on Bitcoin. I look at this retracement as just a fantastic opportunity to buy in at lower levels. And that's absolutely what you want to do. It doesn't matter if you're an investor or a trader, you always want to get a better bargain. In yesterday's video, I talked about farmers planting and waiting, and CryptoTurtle came out and said some really cool things that I wanted to share with you. CryptoTurtle said, I look at the daily structure first. Now this is the daily structure. I look at that first because I need to see if price has structural support, resistance, or any gaps before I place my buy or sell orders. And usually I have my orders on strong support SLs, which are Stanfield levels, or also called CTKS levels. These are these dotted areas, these dotted and dashed areas. These areas, if you've got more, it means stronger. If you've got less and lighter, it means weaker. Next, CryptoTurtle looks into the monthly direction. And lastly, CryptoTurtle does the long view. And correctly, CryptoTurtle said, step 0 is the daily CTKS cheat sheet before doing anything. If we're not looking at the cheat sheet, if we're just looking at Bitcoin's price action here, we just basically say, it's come into resistance, sell, just get out. Done, dusted. But we know there's a lot more to financial markets than that. Financial markets are really complex. We have to understand them. And CryptoTurtle goes on to say that he listens to the CTKS Creed and all of the CTKS Trader album. It's part of the daily routine. It is a really good thing to do. I do it as well. Thank you very much, CryptoTurtle, for that terrific response. That is absolutely the way to do it. You look at daily first, then you seek confluence with monthly, and then you do long view, but you always do the cheat sheet first. And many thanks to everybody who answered. It's terrific. We have such an amazing global family. If you're not part of it, just hit subscribe and you're instantly part of our gang. We also need to look at total crypto market cap, especially from a structural perspective, to understand where prices are going across the entire crypto market. So let's pop on the indicator. Now, this indicator is shared with the elite monthly service members. We can see up around that 3.7 trillion and just a little bit lower, we came into a lot of sell side resistance. We've been pushed down there because we had a negative CTKS gap. It reversed that positive CTKS gap. And this is exactly what CryptoTurtle was talking about. He was talking about when you get a positive gap up, it can gap, but if it doesn't consolidate and flip to support, it can reverse right back down again. And this is why we look for gappy areas in price action. Now we can also structurally overshoot, and different times inside the markets create different levels of liquidity as well. Profiting students, you'll understand exactly what I'm talking about. So this $3.66 trillion is really significant, and around that $3.60 trillion is also significant. So there's a couple of levels to keep your eye on in terms of your price charts, and those are these levels. Personally, I just view this as a wonderful opportunity to get in and dollar cost average down structurally. If I was to summarize all of this, Bitcoin came into a lot of overhead structural resistance. Total also came into it. Total because it had a positive CTKS gap, and Bitcoin coming into its own structural overhead resistance did a structural overshoot on the way back because it simply didn't have enough power to push through. Why? Because we're very early days on a potential turnaround inside the markets. Most people will not see this turnaround. The probability, because we're stacking probabilities, is to the upside, but it may take a little bit of time to play out. We don't fear every red candle. We don't go nuts on every green. It's very important to do your daily positive affirmations for abundance, financial success, and happiness. And as Crypto Turtle was pointing out, the CTKS Creed is available through Song. And all you need to do is to just type in the @CTKS method on YouTube and then press search. Look for this particular logo here, and you'll see the CTKS Creed is right here. And you can have a playlist where you can listen to these songs. They will deprogram all the retail mindset out of you and install an institution of one mindset. And it's so important to trade without fear and not to be caught up in panic. Keeping positive is really important, and you know that the universe wants you to succeed. So every day you can show kindness, integrity, and gratitude, knowing that opportunities and life reset daily. Because you're worthy, you can go slow to go fast. Everybody is in such a tremendous hurry to do everything. So they do everything in reverse. They go so fast that they blow their accounts up. Instead, we go the other way. Start small and scale, and learn to buy on red and sell on green. That's the only way to consistent profitability. And always remember that life pullbacks give you the strength for the next life rally. And if you're going through a life pullback at the current time, our love and healing thoughts are with you. Just stay dedicated and committed, focusing on winning or learning and never blaming, and you will solve your problems with positive excellence. If you've made it to here, you're absolutely elite. Most people won't invest the time that they require to be on the right side of the percentage, the right side of the trade, and the right side of life. The result is that they blow up their accounts, they feel terrible from day to day. You're really, really special. You've made it to here. And to let me know that you have, please just write your feelings about the cheat sheet, how you find it useful. That way, I'll know you made it up to here and I'll know who you are. You are absolutely awesome. I would love for you to become part of our global family. All you need to do is smash that like button, subscribe, press the notification bell, and just drop a comment to say hi. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading is a lifelong profession. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that buying lower is the secret to success. You will create security and financial freedom in direct proportion to your capability and willingness to learn. If you commit, your world will improve immediately. I hope you've enjoyed this video, and Kate and I very much look forward to joining you again in the next one. Take care, be kind to yourself, be kind to others, show gratitude and happiness, and you'll already feel richer today. And today is all we ever really have.